So many different times in my life, I've played with broken or hurt things, broken foot, broken leg, broken hand, broken arm, broken sternum, broken collarbone. I could keep going if I just thought more about bones. Why, man? Because I loved it. I loved playing the game. I was passionate about it. One of the reasons I even get encouraged at seeing all of you here, do you know why I get encouraged by that? Is because you could be anywhere doing a lot of different things, but you chose to be here.
Some shows don't need a celebrity narrator to introduce the show, but this show does. In a world filled with endless opportunities, why would two men who have built 13 multi-million-dollar businesses altruistically invest 5 hours per day to teach you the best practice business systems and moves that you can use? Because they believe in you. And they have a lot of time on their hands. They started from the bottom, now they're here. It's the Thrivetime show starring the former U.S. Small Business Administration's Entrepreneur of the Year, Clay Clark, and the entrepreneur trapped inside an optometrist's body, Dr. Robert Zuttner. 2 men, 8 kids, co-created by 2 different women, 13 multi-million-dollar businesses.
We started from the bottom, now we here. We started from the bottom, and we'll show you how to get here. Started from the bottom, now we here. We started from the bottom, now we here.
Mr. Clyde started from the bottom, and now we're at the top, teaching you the systems to get what we got. Kouplen Dixon's on the hooks. I break down the books. Z's bringing some wisdom and the good looks. As the father of 5, that's why I'm alive. So if you see my wife and kids, please tell them hi. It's the CNC up on your radio, and now 3, 2, 1, here we go.
We started from the bottom, now we here. We started from the bottom, and we'll show you how to get here. Started from the bottom, now we here. We started from the bottom, now we here. We started from the bottom, now we here. We started from the bottom, and we'll show you how to get here. Started from the bottom, now we here. We started from the bottom, now we here. Now we here.
Sean Kouplen, how are you, my friend?
Good, thank you.
Hey, for anybody who's watching this, and if you're maybe not super, really, if your knowledge of all things Sean Kouplen isn't super high, I want to give just a little bit of a bio, a little bit of an intro here. Before the age of 34, all these things allegedly happened here. So you were the head of the Chamber of Commerce, the president of a Chamber of Commerce, a national alumni president, an award-winning professor, not one of those professors getting complaints online, a citizen of the year in your hometown, and you ended up being a small business owner as well. I mean, you did a lot before the age of 34. Are you just going to get in a hammock now and just relax?
Pretty much. As I mentioned earlier, I've peaked.
Okay, you've peaked now.
Yes, it's all downhill from here.
Okay, well, we are talking today specifically about managing your banking relationship. And we're talking about this with a guy who owns a bank. So this is a great, if you're watching this and you've ever been sort of, you're trying to demystify, how do I build a banking relationship? Maybe you've just never gone to a bank before. Maybe you're a 20-year-old wanting to start a business, or you're in your 40s and you've never got a business loan before and you just don't know where to start. So, Sean, let's just dive into it here. How do you put your best foot forward when you're dealing with a banker?
I think dealing with banks can be very intimidating. People don't really know where to start. I think it's led to maybe some bad financial decisions because people have funded startups in a way that maybe was more expensive. And it doesn't really have to be that difficult. If you think about a banking relationship, it's not that different than if you were going to loan me money. It's the same thought process that you would go through. You want to make sure that I am of good character, that I pay people back when I say I'm going to, that I have the ability to pay you back, because in underwriting a loan, what you're typically looking at, you're assuming that that person will pay you back if they can. Mm-hmm. Your job is to make sure that they can, because even the best people, whenever they don't have the cash or cash flow, they cannot pay back the loan. So when you are approaching a bank to develop a banking relationship, it is important that you put your best foot forward. And you do that in a number of ways. First, you need to understand your business, whether it is a proposed business that you're thinking of starting or whether it's an existing business that you want to expand. You need to understand the numbers. And that typically means putting together a detailed financial package for the banker.
Let's do an example just so we can kind of give a little context to this. Let's say that I want to open up a series of snow cone stands. Okay. Let's say that's small business, and I'm doing about $100,000 a year of revenue or less. When you say I need to know my numbers, what kind of numbers do I need to know?
First of all, I think it's important to note that banks are really designed to help businesses grow. Okay, they are not typically designed to help a business start up. And the reason for that, as we talked about in one of our other modules, is banks function on a very small profit margin and they are highly regulated. So typically the risk associated with starting a business needs to be borne by that individual themselves through personal savings, through other investors that they can bring in, family, to kind of help them get going. But there are times when you can start a business, and that is normally when the person has other sources of income. So this we see a lot. Husband and wife have good jobs, they have good credit, they have some money saved, and they want to start a side business over here. And the bank goes, you know what, even if this side business doesn't work out, because as we know, 9 out of 10 new businesses do not work out. They're very difficult. It's very difficult. Even if it doesn't work out, they can still make the payments from their jobs, from their income. So that's the most likely scenario for starting a new business.
One of the things I just want to make sure, because if you're watching this, I hope maybe you didn't have the epiphany that I had when I first heard this, but this blew my mind, because I think a lot of people, they go to college, or maybe they didn't go to, either way, they get to a point where they want to start a business. And they have this belief, this kind of false belief that, well, if I want to start a business, I need to go to the bank and borrow money.
Right.
And you've said that banks are primarily designed to help grow businesses and not help start them.
Right.
And so I remember when I was first discovering this information, I thought, well, I'm going to have to go work construction, or I'm going to have to borrow money from friends. In my case, I worked construction. I know a lot of people watching this, maybe you've had to get second jobs, different jobs, but it just because your local bank won't lend you money to start a business, it doesn't need to crush your entrepreneurial dreams.
No, that's right. And it doesn't mean that the bank doesn't believe in you. We see people start successful businesses all the time. We want them to. It's just when you look at the financial profile of a bank, the risk that is associated with starting a brand new business that has really no other source of repayment if the business doesn't work out, it's just too great for the financial modeling of the bank. It's not personal. It's not that we don't want to help you. I have match made over $70 million in deals where an individual wanted to start something, the risk was too great for the bank. Maybe they didn't have enough collateral. Maybe they didn't have the experience, whatever the case may be, but I still felt like it was a good deal. Sometimes I have invested in those. Other times I have found other individuals that have invested. That's how you need to get started. And then you prove your concept up, even on a small scale. Then you come to the bank, and the bank is there for growth capital. That's really what we are designed to do.
And so just we can put these up on the screen so we're clear here. You do have to have 3 years of tax returns. You do have to have a current balance sheet. You do have to have a current year-to-date profit and loss. And you also have to have a current accounts receivable, like an aging report.
Yes.
And if you are confused at any of what these terms are, we have some unbelievable Thrive segments in our accounting section of the website where you can really get into what those mean. But before you show up to meet with the banking institution, you really want to have all these documents.
You do. And the reason is that the bank is underwriting the credit. So we are basically studying the risk of making this loan. The only way to do this is by looking at historical numbers. There is really no other way. Your your verbal assurance that it's going to be great and you have a great plan. It is important, and we need to know that you understand your business and that you have a plan to move forward. But frankly, the past is the best predictor of the future. And so having proven numbers and understanding those numbers is important. So that's why, typically you want both personally and for your business, you want to have, as you mentioned, at least 3 years of tax returns. You want to have a current financial statement or a balance sheet, and that just lists what you own and what you owe. If it's in the middle of the year, you want to have how you're doing so far that year, so a current year-to-date profit and loss statement. And then accounts receivable aging is important because we want to understand who owes you money and how currently they are paying.
Now, when you say that the past is the best predictor of of the future, essentially, I want to make sure that the Thrivers are watching this and you're kind of not getting the wrong impression here, because I know that my 18-year-old likes to fight guy mentality would say, well, he's being negative and he means that people can't change. No, we're talking about lending money to people. And so if you're somebody who has really made a bunch of poor decisions up until right now, it doesn't mean your entrepreneurial dreams are crushed. It just means the bank would have to be a little bit crazy to lend if you've had a series of calamities up until now, right? I mean, so it doesn't mean that you're, as a person, writing somebody off. You're just saying, this is how we have to judge somehow, and this is the determining factor.
Again, it really boils down to the risk profile that the bank can take because of our business model, because we're highly regulated and because we function on a very small profit margin. We see people, Thrive is all about change and changing our behaviors and changing our outcomes. I am a huge believer and have personally experienced that. So it's not that we don't think people can turn it around. The main thing is whenever you have a business concept that is not proven, it is just an idea. It's just important that viewers know that that concept really needs to be proven with private capital, and then once it's proven, then we can help you take it from there.
So again, if you're watching this and you just feel like, well, the bank said no, my idea is so great. Don't give up on your dreams. You just have to get private capital. And I just want to add a little anecdotal supporting evidence there. Henry Ford, Bill Gates, Steve Jobs, these are all guys that initially started in a garage or started in a house, and they had to just scrap together whatever they could get. And then once they proved the concept enough, they were able to get outside investments. And so don't feel discouraged. We have some great episodes on how to raise capital in non-traditional ways if for some reason banking doesn't work out for you there. As the way for you to get the capital you need. Now we're getting into the 5 C's of credit. The 5 C's of credit. I'm going to read these off here and then we're going to dive into them here. Okay. So the first one is cash flow. The second is credit history. The third is collateral. The fourth is character, and the fifth is capacity. So let's go with cash flow, and boom, cash flow.
Okay, so let me give you a great example. When I put a group together and purchased Regent Bank, just so your viewers don't feel bad, we did not have cash flow. We purchased a bank that was struggling, losing money, was having a tough time. It was definitely a turnaround situation. I couldn't get a loan either. So I had to go raise the money from private investors to purchase the bank. So the first and most important C of credit, and the C's of credit, by the way, these are what a banker looks at when they are evaluating you for a loan. Okay, so they are going through these 5 steps. First of all, is there cash flow to repay the loan? Now, this cash flow can be from your business. That's ideal. The business is showing a profit and has the ability to make the loan payment for the new piece of equipment or building or expansion or whatever it is that we're going to do. We're going to give you the money up front, but you have the ability to pay it back over time.
I'd like to define cash flow. Just for everybody watching this, here's like, cash flow, what does that mean? Can you define what cash flow means?
Sure. Cash flow is just revenue in excess of expenses. And so you'll hear a lot of terms for profit, EBITDA, net income, etc. But what we're really interested in is is cash. So how much cash you bring in, less how much cash goes out, is how much cash flow or kind of net cash that you have to work with.
Now, your credit history. Let's talk about this. Your credit. There's a lot of just sort of false information, and we don't have time to get into all of this real quick, but there's a lot of people I know who borrow money for things they do not need to borrow money for, or who keep money on revolving credit on credit cards, paying interest, and they don't need to. And they'll say, well, the reason why I'm putting this on my Visa, the reason why I bought this TV on my Visa, and I'm just going to let it ride and just pay minimum payments is because I'm building up my credit history.
Right.
You hear a lot of this. Can you tell me what credit history really means?
Yes, and you are right. We could spend hours on dissecting a credit score and how to manage it. And you are also right that people will often do things that are negative to their credit to try to help their credit. Credit history it's simply your history of paying back debts. So whether that is via car, home, business loan, credit card payment, whatever the case may be, we are simply interested in whether or not when you make a commitment to repay something, you pay it back. And the reason that this is important is for two reasons. First, we want to make sure that you are organized and detailed and make your payments on time. We have thousands of clients, and so you simply do not, we only have 53 employees, so you just cannot have to call every single client every single month to make their payment. So that's one, it shows that you're organized and that you stay on top of your business. The other thing a credit history shows is that you don't get overly obligated. So you don't live beyond your means. You manage risk appropriately. You don't buy things that you can't afford, and so you have the ability to make those payments. So those are really what you're looking for when you're looking at credit history.
Now, collateral. What does the word collateral mean?
Collateral is basically an item of value that you provide to a bank or lending institution, and you in essence say, if I don't pay you back, you can have this. It would be like if I needed $50 and you say, okay, give me your watch, and I'll give it back to you when you repay me the $50. That is what collateral is.
I had a speaking event in Wisconsin, and I get there in my, when you reserve a card or a rental car, you have to use a certain credit card. Well, I got there, and I guess that my card that I normally had, I left it in my other. Anyway, I had the different credit cards. They wouldn't let me rent the car, and then all the cars were already rented out. So long story short, I find myself needing to travel like 8 hours, I think it was 6 hours, in a taxi from point A to point B in Wisconsin. And so I had to tell the guy, I'm like, buddy, you can take my wallet as collateral if I don't pay you once I get there or whatever. And so it's important that we know what that term means. It's just a way to kind of guarantee that if I don't pay you back, you can have this.
Exactly. That's really what it is in its simplest form. And collateral can be almost anything. I mean, it can be real estate that you own. It can be equity in your home. It can be cars. It can be equipment, accounts receivable. It can be stocks and bonds investments that you own.
I want to clarify what's not collateral, because I work with a lot of small business owners that ask me to help them grow their business, and I'll work with them. And a lot of times they'll have things that are not, in fact, assets, but they think they are. And so what are some common things that people will put down as collateral? They'll say like, my Joe Montana poster. What are some things that people put down as collateral typically to secure loans that is not actually collateral?
Probably the top three are personal property, as you mentioned. And this is a famous one they'll put down. I have $100,000 of personal property. Well, I mean, it's an old couch, it's an old refrigerator, it's an old, so these things are worth pennies on the dollar at best. We may actually have to pay someone else to get those things. So personal property is one that cannot typically be used as collateral, unless it's jewelry, or it is art, or something that really has a market value. A second one is retirement funds. This is actually a big one. If you have money in an IRA or 401k, they cannot be collateral collateral because they are protected from creditors. That's the purpose of retirement funds. And so if you're putting money into a 401k, you can't pledge it as collateral because we couldn't take it even if we wanted to. The third item that people try to use as collateral is life insurance. Life insurance can build a value over time. If you have a whole life insurance policy and you're putting money into it, it will build a cash value over time. But what you'll see a lot of times is people will put life insurance $1 million down, and $1 million is the asset that they want to put up as collateral. That's only $1 million if they die. It's a term insurance policy, and we do not want to have to kill you to get our loan. That's actually illegal.
Okay.
So we can't do that anyway. So those things. So people need to understand whatever the collateral is that you are putting up has to be readily marketable today. If you stop making the payments today, we would have to be able to sell that.
Now, I want to get to this next one here. This next one of the 55 C's here is character. And I think this is big because I see a lot of means to an end entrepreneurship out there. Frankly, when I was growing up financially without much in the way of financial means, Eminem was one of my heroes, you know, and then after that it was kind of mentality of like whatever it takes.
Right.
And I think once I met my wife, she's much more of like, hey, let's do things the right way. She's a great person.
Yes,
yeah,
let's be honest.
No, she is,
Yes,
and she said, hey, you know, the character counts, and so luckily as our businesses have grown and my career's matured, I've been able to build sustainable relationships where I've known people for a decade and have tried to do the right thing.
Sure.
Talk to me about character and how big, I mean, let's just say I have cash flow, I have credit history, I have collateral, but you know that there's something just weird about my character. Just how does that fit into the equation when the banks decide to lend or not?
You know, the bank is not, we're not trying to judge people.
Yeah.
That's not, but we are trying again to analyze risk. That's what we do. That's our job. So as you're looking at someone's character, what you're very interested in is if they do what they say they will do. And so the world is very small, and I would tell your viewers out there and Thrive members that your character, it's extremely hard to build it over time. It's extremely easy to lose that reputation quickly, and it takes decades to rebuild. And some people never are able to rebuild whenever they do things that are really wrong. So what we're looking at is just a person's tendency to be honest, do what they say they will do, not overcommit. In business, you see a lot of over promoters, individuals that sell others on an idea that isn't a sound idea. And they know going in that it's not a sound idea, but it's a way that they get money. And so, that comes to pass. But probably the biggest thing we're looking for is just your market reputation. Is this person, and you know it. You think about all the people that all of us know in our lives, certain people are rock solid. When they say something, you can really take it to the bank, so to speak. I mean, you can believe in what they say. Others, are more marginal, and so that's really what we're looking at.
Now, this final one is capacity. The capacity. What are you talking about when you say capacity?
Capacity is a way to say net worth, but start it with a C.
Okay.
Because we needed a fifth C for the 5 C's of credit. So capacity is really net worth, and capacity is really your ability to meet an obligation, even if everything went against you. Okay. So you're looking at, I lose my job, my business doesn't go well. Can I pay? Well, the only way that you can pay is if you have assets that you can liquidate that you don't owe money on, if you have, investment funds that you can turn to. So you're looking for, another way of saying capacity is cushion. You're looking for someone that has financial cushion where they can withstand a downturn.
Now, so let's just say that we have these 5 C's in place. And so now what we have to do is we have to really kind of put our best foot forward by really knowing and understanding our historical operating numbers. Walk me through what that means when you say understand your historical operating numbers, your assumptions, the trends. Just kind of walk me through what that means to you.
Sure. You know, we started out by listing all the things you need to bring to the banker,
Yeah.
all of the financials you need to bring, and then we kind of went through the 5 C's of how they'll analyze you. And now we want to talk about how important it is to know your numbers. This applies whether you have an existing business or a new business. And let's dissect the two. If it's an existing business, you really need to understand your trends. If your gross margin has begun to shrink, the difference between what you buy and sell your product at has begun to shrink over time, you need to know that. You don't want the banker to point that out to you. And you need to understand why that is and what you are doing to turn it around. You know, if sales have dropped, you don't really want the banker to point that out. The banker doesn't want to have to tell you that your business is moving in a negative direction. If there have been huge increases, you need to know why that is. You need to understand it. One of the most concerning comments that you receive as a banker is a business owner will come in, they want to borrow money, you look at their financials, there are some things happening in there, you ask about it and they say, you know, I don't really know. The accountant just puts these together. You know, I just work. I don't really understand the numbers. That doesn't give you any confidence in the financial performance of that company.
I've seen this a lot, and so you've probably seen it a lot. But I see a lot of business owners, in particular, in this world of where there's a lot of people that have this idea to open up a restaurant or it's kind of like a passion.
Yeah.
It has nothing to do with the money. They passionately want to open a restaurant or a bakery, or they passionately want to open up a sports store. There's a passion there.
Sure.
And it's not necessarily based upon a financial business model. And I'll sit down with the business owner. This is before they borrowed money. And I say, how many football jerseys do you have to sell to pay for the lease? Or how many cupcakes do you have to sell to pay for just the lease? How many? And usually I don't know. And I said, well, before you go apply for the bank loan, you need to know this kind of stuff. And so these are some neat things these are some things that we all need to know. We need to know our historical operating numbers. We need to know our assumptions, our trends. Any other numbers that you feel like we just have to know when we're talking to a banker? I mean, do you want to know your break-even point, or what else do you want to know?
Yes. Now, if it's again, we kind of highlighted an existing business.
Okay.
So we're going to assume that they are breaking even. We just want to understand the trends of their numbers over time. In a new business, no question. You need to understand, there are so many things we need to understand.
Okay.
We need to understand the market. We need to understand the competition. We need to understand what we forecast the margin to be, what it's going to cost us to buy the product, what we need to sell it at, including overhead expenses. We do need to understand a break even, no less, no question about that. And so we just need to fully, and this is the least, I understand this is the least enjoyable part of business for everybody.
Yeah.
But it is the most critical part of business. You know, if you don't understand your numbers, you're not going to understand how to make adjustments whenever things are not working within your business.
So if we're going back to snow cone land for a second. So I have a snow cone stand. I'm saying, hey, I want to open up 27 of these guys. You're saying, hey, you might have a great marketing and you might have a lot of customers at location 1 or 2, but you still need to know your market, your competition, your margin forecast, your overhead expenses, your break-even point, your assumptions, your trends. You need to know those numbers.
You do. You need to know those numbers frontwards and backwards. And you really need to understand, in addition to just the basic business numbers, you need to understand what you need to live. You know, myself as the entrepreneur, I need X number of dollars to survive on a monthly basis and pay my mortgage and pay my car. Can I sell enough snow cones, to make that work? So it's actually more complex than I think people realize. I think it's very important that small business owners have a good accountant to kind of help them dig into those numbers and put together, very reasonable, projections for what they think their business can do.
Now, what about highlighting your equity injection? What does that mean?
It's very important to a bank that you have your own money into your venture. So it's important sometimes that equity injection, the money you've put in, it's not real clear. You've just paid expenses over time, or you've put a lot of sweat equity into a company. So it's just important when you sit down with the banker to make it very clear, this is what I put into it. I'm not asking you, Mr. Banker, to put everything into it. I'm risking everything too, and this is how much I've put into it.
And then the final area here is we need to pay down those credit card balances. If we're going to put our best foot forward, we really need to pay down those credit card balances. Why?
I understand that there are times when it makes sense to use credit cards. It does help build your credit if you advance them and pay them off. There are 0% rate opportunities out there that clearly can save you money. I will say there's normally a fee associated with those, so they're not free per se, but I can understand why you would sometimes use them. Most of the time, however, credit card balances are a sign of living above our means. The fact that we have had negative cash flow, so we have had to finance our life on credit, and that is typically a red flag to a banker.
Okay. Now, the final thing I want to ask you here about, as far as putting your best foot forward when working with a banker, I guess the question I want to ask you is it important that the person kind of looks the part? And I'm not talking about they have to wear a suit and tie, but is it important that somebody, at least dresses to impress or looks sharp, or at least their first impression when you first meet them? Does that at all, factor in? I mean, if somebody just looks the part at all, is that important, or does that matter?
I think it's important anytime you're going into a business meeting to show respect for the other person in the meeting by looking appropriate. I do not think that a client needs to dress up to come into the bank. We're people. We have a uniform that we wear just like everyone else, and we want to look nice so that they have confidence in us, but they certainly don't need to feel like they overdress.
Yeah, and I'm just curious because I think that a lot of people have a stigma that maybe if I don't wear a tuxedo going there to try to get my bank loan, I might not get. Okay, so now let's talk about some of these mistakes that you have to avoid. Let's talk about some of these mistakes you have to avoid. You're saying here it's lack of proven cash flow. What does that mean?
Well, we touched on it earlier, but one of the mistakes that people make is they basically come to borrow money without any real proven way to pay it back. So you need to either be able to show through your business financials or through your personal income that you have the cash flow to pay it back. As we discussed earlier, the days of being able to borrow money on an idea and just hoping that idea works out, I think, unfortunately, are long gone.
Okay. Now, what about leaving minimal equity in the business? What does that mean?
This is a good one. This one we see a lot of. When times are good, a business owner can pull a lot of the cash out of the business, and the business will continue to function. Accounts receivable are being collected quickly, cash is being generated, so they don't need to leave a lot of cash in the business. However, when times get tough, that can be a disaster. And so what we unfortunately saw a lot in the recent downturn is people with great businesses pulled all of the cash out of those businesses. As you accumulated cash, they would take it out and go buy personal assets with it. And then when times became difficult, they came in and wanted to borrow money. And when you looked at their company, they had very minimal equity, and that made it difficult to loan money. So I think it's always best. Our personal principle is that we leave all equity in the company. And you're going to have conflicting advice here. You're going to have an accountant who is going to say, pull all the money out because you're risking it, leaving it in there. If you get sued, somebody can get it.
Yeah.
You're going to have the banker saying, leave it all in because it makes you safer, more bankable. And I think, honestly, the truth is somewhere in between. I think you can pull some money out, but you need to leave adequate
I have heard this, and you don't. I'm curious to get your thoughts on this. I've heard this from people who are not owners of banks. Okay, and I just want to get your take on this.
Sure.
But they've said that a lot of these guys I've met over the years have said keep a lot of equity in your business and just buy a ton of insurance because it's just a cheap way to mitigate the risk of being in business. But at the same time, it allows your business to look healthy when applying for loans and that kind of thing. Would you agree that every business owner should just buy a bunch of insurance? And
Yeah. I mean, again, as with everything, there's bad insurance and there's good insurance.
Yeah.
And so, but yes, that principle I think is very sound. And it's not only leaving equity in the business for the bank, it's also leaving equity in the business so that you can take advantage of opportunities.
Okay.
You know, I mean, we don't know when a competitor is going to go out of business or a new salesperson is going to become available, or, you know, we can buy a whole bunch of inventory at a discount. We don't know when that's going to happen. When you have cash, you can take advantage of that. That's why, unfortunately, you see many times in life where the rich get richer.
Yeah.
A lot of that is because they have the capital to take advantage of opportunities that others cannot.
And I've always kind of viewed cash as basically it just allows you to buy opportunities, allows you to seize opportunities. And there's a big phrase you hear a lot in business that cash is king. The idea that you have a lot of cash, you have more opportunities.
Right.
Now, talk about unrealistic assumptions. These are mistakes to avoid, the unrealistic assumptions.
This is the one where you say that you're going to go from $0 to $1 million in the first year, and there is no real basis for that whatsoever. This happens all the time.
Okay.
I'm going to do it because Google did it. Well, you know, Google's 1 in a billion,
Okay.
you know, in terms of companies. When you make assumptions of growth, you need to have a realistic reason for understanding why. And this one really comes in when a business has been growing at 10 or 15% a year for every year, and then they come in and apply for a loan, and all of a sudden their assumptions show them growing 40 and 50%. The question has to be, you know, why is that the case? And unfortunately, because I'm going to put more money into marketing, that's not always the right answer. More money in marketing doesn't always lead to more sales, as we know.
Now, what about giving half the story? What is a prime example of giving half the story?
Well, this is when you come to a bank and you know that you've had problems in the past, but you don't really want to be honest about those problems. You would rather give a different version of reality. And the problem becomes when the banker learns the true version of reality, which we will because that's really what you're trained to do. You're trained to figure out, kind of put the pieces of the puzzle together. It just makes you look dishonest.
Well, when you think about it, if you're watching this and maybe you're feeling a little bit down and out because you've made some credit snafus in your past, Walt Disney, you know, lost it all twice. Henry Ford lost it all 5 times. There's been a lot of successful entrepreneurs who've bet it all and lost it, and then, you know. So it doesn't mean you're a bad person if we've made mistakes. I think it's just important that we own it. And when somebody asks you what happened, I think it's important that you can share with them. But I also would offer this suggestion in banking that maybe you bring up your past snafus maybe before the banker looks too deep into it, because it'd be nice for you to be forthright about explaining the issue and owning what happened, so that way the banker has that already there, as opposed to thinking you're going to hide it. Because with the technology available today and the internet and all the resources,
right,
highly unlikely that you're going to be able to hide some sort of credit snafu or some issue in the past.
That's exactly. I really couldn't have said it better. Past financial problems are they're okay. They happen to all of us. Make bad investments and bad decisions, and maybe they were good investments that just turned bad. It's not necessarily your fault. It's just much better to just come clean, admit those up front, talk about how you're going to mitigate doing that in the future. That's far and away the best way to handle it.
Now, a few other mistakes to avoid here is poor personal or business credit history. When you say poor personal and business credit history, what are we talking about?
Just not paying your bills on time. So again, that is as much as we hate to admit it, the past is the best predictor of the future. everybody understands things happen, but on a credit report, then that should look like a blip. It should look like ones where you made your payments on time, and then you had an issue, and then you recovered. Unfortunately, what you typically see is either really good credit or really bad credit, where people just pay late all the time and just don't have the ability to handle their finances.
Now, poor communication, what does that mean in the context of banking?
That means as you're managing your banking relationship, when you have problems or when you have issues, being forthright with the banker. If we know what is going on, we can almost always help you. What we cannot do is when you're not answering the phone, or you're embarrassed and won't return a phone call or an email or a text, we have to assume the worst.
Yeah.
And so good communication, I think, is very important.
What about lack of loyalty there in banking? Does that mean if you're a bank hopper, you go from bank to bank to bank, you just kind of move around, or what does that mean, lack of loyalty?
Well, it really does. It means that, and I know this is an ego decision, but I really want to encourage your viewers to think about switching banks if they've had a good experience with a bank. Any bank. If that bank has been there for them and treated them well, switching for a very small quarter to half a point of interest, I think is a very bad decision because one, if you'll look at what that 0.5% costs you on your overall P&L, it's going to be minute.
Yeah.
It's going to be a rounding error on your P&L. What's much more important is having someone that you can count on that will be there for you when you need them.
Yeah.
So what happened to us, again, and this always happens during tough times. During the recent recession, we had lost a client or two because somebody had come along and offered them a lower rate. And we went as low as we could go. We just didn't feel like we could go that low. The individual left. They got into trouble. Their bank didn't know them or care about them, so they weren't there for them when they needed them. They didn't help them with cash when they needed it. They didn't stand by them. And unfortunately, you can burn a bridge with a financial institution by leaving, and the loan committee goes, why should we jump out there again? I mean, this individual wasn't loyal to us the first time.
Yeah.
Why should we believe that they will be again? So I just think when considering a banking relationship, you should really think about the relationship first and then the pricing second.
Well, and just two examples of that real quick. In Tulsa, there was one gentleman who had a bank. His first name was Carl. And I knew a lot of people in Tulsa who'd banked with Carl for years. And they would say, I bank with Carl. And they even started doing commercials in town about how I bank with Carl. I've known Carl for years. And I know a lot of people that were real stories of real examples of somebody who had worked with Carl for when he first got into the business through towards the end of his career there. And they had a relationship, and they had gone through marriages and divorces and illness and death and all the things that happen in a business, but they were there for Carl. Carl was there for them. Sure. And I know, having banked with you now for basically well over a decade, it's been interesting because we all go through stuff. You have kids, you have, there's just stuff that happens. And I think it's so important that we don't view banking as a transaction,
right,
but we view it as a relationship. And I think that's just super important. It's not just if you're not careful, it becomes this automatic recurred billing sort of thing. You just pay it. You don't think about the people, but you really do have to make an effort to build a relationship, don't you?
Particularly when times are tough. We always say anybody can bank you when times are good. Where the relationship comes in is when you're struggling. Who's going to stand by you? And that's where I think these relationships are so important.
What about the inability to give the global picture?
Yeah, this deals with when someone owns a number of different businesses. Banks today have to understand your whole picture. They have to know your entire financial picture. So the days in which I own 15 businesses and I can just bring you one and call it good, that doesn't work because the other businesses can drag down the one that I am banking. So, and frankly, it's required by regulators. So if you're borrowing money of any size, you need to go ahead and spend the money to put together a global financial statement, one that shows all of your companies, all of your entities, globally, whether they make money or not.
And I want to just hammer home on this for a second. If you're watching this and you are not using a bookkeeper or accounting service, I am example A1, exhibit A, B, C, whatever. I forever did my own bookkeeping. Well, then as our business grew, my wife started doing bookkeeping with me. And because we had different businesses, we had to provide these reports. And we weren't the best at doing it because neither one of us are professionally trained accountants. And eventually the business got so big that we had to hire a bookkeeper. And I would just encourage anybody watching this, if you are awesome at, let's just say that your company is this snow cone stand we've talked about. If you're awesome at marketing and selling snow cones and getting people there, don't spend all your time bookkeeping. Hire a professional bookkeeper because banks need this kind of global picture information when they, they don't want a bunch of handwritten, post-it notes. They want to actually have professionally prepared documentation. It's well worth it, isn't it, to have a professional bookkeeper?
It is. Your business is judged by your financials. It is that simple. We are judged by our ability to communicate. As individuals, either written or verbally, your business is judged by the quality of the financial statements. So it's well worth the money, to have a professional help with those.
Now, the final mistake we want to avoid here, is the failure to provide financial documentation. Like you just kind of say, uh-oh. I don't have that, or how does that usually go down when someone doesn't have the financial documentation?
Yeah, it can either be on the front end when you're applying for a loan. They make a lot of blanket statements about how the business is doing, but they can't back it up with any financials. Or in an existing banking relationship, it happens when the banker requests tax returns, financial statement, accounts receivable, and you don't take the time to provide them. Over time, the banker loses confidence in your ability to provide financials.
So if you're the kind of guy who says, I'll get that to you later, but you never come back, that's not a good thing for you. You want to make sure you provide that documentation.
Right.
Sean, I appreciate you taking the time to deep dive into how to build a banking relationship.
You're welcome.
And again, if anybody wants to know more information about you, or I know you have a couple books you've written as well, but where can they find more information about your particular bank online there?
Sure. Our bank is Regent Bank in Tulsa, Oklahoma. Bankregent.com is our website.
Hey, thank you so much.
Thank you.
Appreciate it.
You bet.
JT, do you know what time it is?
4:10.
It's Tebow time in Tulsa, Jerusalem, baby. Tim Tebow is coming to Tulsa, Oklahoma. During the month of Christmas, December 5th and 6th, 2024, Tim Tebow is coming to Tulsa, Oklahoma in the 2-day interactive Thrivetime Show Business Growth Workshop. Yes, folks, put it in your calendar. This December, the month of Christmas, December 5th and 6th, Tim Tebow is coming to Tulsa, Oklahoma in the Thrivetime Show 2-day interactive business growth workshop. Whoa. We've been doing business conferences here since 2005. I've been hosting business conferences since 2005. What year were you born?
1995.
Dude, I've been hosting business conferences since you were 10 years old. And a lot of people, have followed Tim Tebow's football career on the field and off the field. And off the field, the guy's been just as successful as he has been on the field. Now, the big question is, JT, how does he do it?
Well, they're going to have to come and find out because I don't know.
Well, I'm just saying, Tim Tebow's going to teach us how he organizes his day, how he organizes his life, how he's proactive with his faith, his family, his finances. He's going to walk us through his mindset that he brings into the gym, into business. It is going to be a blasty blast in Tulsa, Jerusalem. Folks, I'm telling you, if you want to learn branding, you want to learn marketing, you want to learn search engine optimization, you want to learn social media marketing, that's what we teach at the Thrivetime Show 2-day interactive workshop. If you want to learn accounting, you want to learn sales systems, you want to learn how to build a linear workflow, you want to learn how to franchise your business, that is what we teach at the 2-day interactive Thrivetime Show business workshop. Over the years, we've had the opportunity to feature Michael Levine, the PR consultant of choice for Nike, for Prince, for Michael Jackson. We've had the top PR consultant in the history of the planet has spoken at the Thrivetime Show workshops. We've had Jill Donovan, the founder of RusticCuff.com, a company that creates apparel worn by by celebrities all throughout the world. Jill Donovan, the founder of RusticCuff.com, has spoken at the two-day interactive Thrivetime Show business workshops. We have had the man who's responsible for turning around Harley Davidson, a man by the name of Ken Schmidt. He has spoken at the Thrivetime Show two-day interactive business workshops. Folks, I'm telling you, these events are going to teach you what you need to know to start and grow a successful business. And the way we price the events, the way we do these events, is you can pay $250 for a ticket or whatever price that you can afford. What? Yes, we've designed these events to be affordable for you, and we want to see you live and in person at the two-day interactive December 5th and 6th Thrivetime Show Business Workshop. Everything that you need to succeed will be taught at the two-day interactive Thrivetime Show Business Workshop, December 5th and 6th in Tulsa, Oklahoma. And the way we do these events is we teach for 30 minutes, and then we open it up for a question and answer session so that wonderful people like you can have your questions answered. Yes, we teach for 30 minutes, and then we open it up for a 15-minute question and answer session. It's interactive. It's 2 days. It's in Tulsa, Oklahoma. We've been doing these events since 2005, and I'm telling you, folks, it's going to blow your mind. Yes, ladies and gentlemen, the Thrivetime Show two-day interactive business workshop is America's highest rated and most reviewed business workshop. See the thousands of video testimonials from real people just like you who've been able to build multi-million-dollar companies. Watch those testimonials today at thrivetimeshow.com. Simply by clicking on the testimonials button right there at thrivetimeshow.com, you're going to see thousands of people just like you who've been able to go from just surviving to thriving. Whoa. Each and every day, we're going to add more and more speakers to this all-star lineup, but I encourage everybody out there today, get those tickets today. Go to thrivetimeshow.com. Again, that's thrivetimeshow.com. And some people might be saying, well, how do I do it? What do I do? How does it work? You just go to thrivetimeshow.com. Let's go there now. We're feeling the flow. We're going to thrivetimeshow.com. Again, you just go to thrivetimeshow.com. You click on the business conferences button, and you click on the request tickets button right there. The way I do our conferences is we tell people it's $250 to get a ticket.
Yep.
Or whatever price that you can afford. And the reason why I do that is I grew up without money. JT, you're in the process of building a super successful company. Did you start out with $1 million in the bank account?
No, I did not. Nope, did not get any loans, nothing like that. Did not get an inheritance from parents or anything like that. I had to work for it, and I'm super grateful. I came to a business conference. That's actually how I met you, met Peter Taunton. I met all these people.
So if you're out there today and you want to come to our workshop, again, you just got to go to thrivetimeshow.com. You might say, well, who's speaking? We already covered that. You might say, where's it going to be? It's going to be in Tulsa, Jerusalem, Oklahoma. And so it says Tulsa, Jerusalem. I'm really trying to rebrand Tulsa as Tulsa, Jerusalem, sort of like the Jerusalem of America. But if you type in Thrivetime Show and Jinx, you can get a sneak peek or a look at our office facility. This is what it looks like. This is where you're headed. It's going to be a blasty blast. You can look inside, see the facility. We're going to have hundreds of entrepreneurs here. It is going to be packed. Now, for this particular event, folks, the seating is always limited because my facility isn't a limitless convention center. You're coming to my actual home office, and so it's going to be packed. Who? You're going to come. Who? You? I'm talking to you. You can just get your tickets right now at thrivetimeshow.com. And again, you can name your price. We tell people it's $250 or whatever price you can afford. And we do have some select VIP tickets, which gives you an access to meet some of the speakers and those sorts of things. And those tickets are $500. It's a 2-day interactive business workshop, over 20 hours of business training. We're going to give you a copy of my newest book, The Millionaire's Guide to Becoming Sustainably Rich. You're going to leave with a workbook. You're going to leave with everything you need to know to start and grow a super successful company. It's practical, it's actionable, and it's Tebow time right here in Tulsa, Jerusalem. Get those tickets today at thrivetimeshow.com. Again, that's thrivetimeshow.com.
Hello, I'm Michael Levine, and I'm talking to you right now from the center of Hollywood, California, where I have represented over the last 35 years 58 Academy Award winners, 34 Grammy Award winners, 43 New York Times bestsellers. I've represented a lot of major stars, and I've worked with a lot of major companies. And I think I've learned a few things about what makes them work and what makes them not work. Now, why would a man living in Hollywood, California, in the beautiful sunny weather of LA, come to Tulsa? Because last year I did it, and it was damn exciting. Clay Clark has put together an exceptional presentation, really life-changing, and I'm looking forward to seeing you then. I'm Michael Levine. I'll see you in Tulsa.
Thrivetime Show 2-day interactive business workshops are the world's highest rated and most reviewed business workshops because we teach you what you need to know to grow.
You can learn the proven 13-point business systems that Dr. Zellner and I have used over and over to start and grow successful companies. I mean, we get into the specific steps on what you need to do to optimize your website. We're going to teach you how to fix your conversion rate. We're going to teach you how to do a social media marketing campaign that works. How do you raise capital? How do you get a small business loan? We teach you everything you need to know here during a 2-day, 15-hour workshop. It's all here for you. You work every day in your business, but for 2 days you can escape and work on your business and build these proven systems so now you can have a successful company that will produce both the time freedom and the financial freedom that you deserve. You're going to leave energized, motivated, but you're also going to leave empowered. The reason why I've built these workshops is because as an entrepreneur, I always wish that I had this. And because there wasn't anything like this, I would go to these motivational seminars, no money down, real estate, Ponzi scheme, get motivated seminars, and they would never teach me anything. It was like you went there and you paid for the big chocolate Easter bunny, but inside of it, it was a hollow nothingness. And I wanted the knowledge, and they're like, oh, but we'll teach you the knowledge after our next workshop. And the great thing is we have nothing to upsell. At every workshop, we teach you what you need to know. There's no one in the back of the room trying to sell you some next big get-rich-quick, walk-on-hot coals product. It's literally, we teach you the brass tacks, the specific stuff that you need to know to learn how to start and grow a business. And I encourage you to not believe what I'm saying, and I want you to Google the Z66 auto auction. I want you to Google elephant in the room. Look at Robert Zellner and Associates. Look them up and say, are they successful because they're geniuses, or are they successful because they have a proven system? When you do that research, you will discover that the same systems that we use in our own business can be used in your business. Come to Tulsa, book a ticket, and I guarantee you it's going to be the best business workshop ever, and we'll even give you your money back if you don't love it. We've built this facility for you, and we're excited to see you.
And now you may be thinking, what does it actually cost to attend an in-person 2-day interactive Thrivetime Show business workshop? Well, good news. The tickets are $250 or whatever price that you can afford. What? Yes, they're $250 or whatever price you can afford. I grew up without money, and I know what it's like to live without money. So if you're out there today and you want to attend our in-person 2-day interactive business workshop, all you got to do is go to thrivetimeshow.com to request those tickets. And if you can't afford $250, we have scholarship pricing available to make it affordable for you.
I learned at the Academy, Kings Point in New York, acta non verba. Watch what a person does, not what they say.
Whoa. Good morning, good morning, good morning. Robert Kiyosaki, the Rich Dad Radio Show. Today I'm broadcasting from Phoenix, Arizona, not Scottsdale, Arizona. They're close, but they're completely different worlds. And we have a special guest today. Definition of intelligence is if you agree with me, you're intelligent. And so this gentleman is very intelligent. I've done this show before also, but very seldom do you find somebody who lines up on all counts. And it's a Mr. Clay Clark. He's a friend of a good friend, Eric Trump. But we're also talking about money, bricks, and how screwed up the world can get in a few and a half hour. So Clay Clark is a very intelligent man, and there's so many ways we could take this thing. But I thought, since you and Eric are close, Trump, what were you saying about what Trump can't, what Donald, who's my age, and I can say or cannot say?
First of all, I have to honor you, sir. I want to show you what I did to one of your books here. There's a guy by the name of Jeremy Thorne, who was my boss at the time. I was 19 years old, working at Faith Highway. I had a job at Applebee's, Target, and DirecTV. And he said, have you read this book, Rich Dad, Poor Dad? And I said, no. And my father, may he rest in peace, he didn't know these financial principles. So I started reading all of your books and really devouring your books. And I went from being an employee to self-employed to the business owner to the investor. And I owe a lot of that to you. And I just wanted to take a moment to tell you thank you so much for allowing me to achieve success. And then I'll tell you all about Eric Trump. But I just want to tell you thank you, sir, for changing my life.
But not only that, Clay, thank you, but you become an influencer. More than anything else, you've evolved into an influencer where your word has more and more power. So that's why I congratulate you on becoming. Because as you know, there's a lot of fake influencers out there too, or bad influencers.
Yeah.
So anyway, I'm glad you and I agree so much, and thanks for reading my books.
Yeah.
That's the greatest thrill for me today. Not a thrill, but recognition is when people, young men especially, come up and say, I read your book, changed my life, I'm doing this, I'm doing this, I'm doing this.
I learned at the Academy, Kings Point in New York, acta non verba. Watch what a person does, not what they say.